in the first hiccup, when the Mississippi bubble, when the Mississippi stock had its first big drawdown from, it was around 6,000 to 4,000, John Law ran out and he said, don't worry. He said, I'm willing to buy back every share at 4,500, above the market price. Right, which was essentially what the Fed did in 2008. Right, the market's collapsing. The Fed, not the stock market, but the bond market, and the Fed said that we're going to guarantee the whole system. They guaranteed $7 trillion of debt. They didn't print $7 trillion. Nope. They guaranteed that much debt.
Stood ready to, yeah.
Stood ready to, and which is what Law did. He didn't actually buy the shares. He just said he would buy the shares. And everyone said, well, great, then we won't sell them. And so it went up to 10,000 as our market has gone way higher. But then the next time he did it, and this is the interesting part, right? It went from 10,000 to 9,000, and Law ran out and looked in his toolbox. The Fed always had their toolbox, right? He said, well, I'll just do the same thing. I'll guarantee to buy all the shares at 9,000. Only this time, everyone tendered their shares.
Right, exactly right.
Right, and so
in exchange for gold, they hoped.
Well, and it's paper money. So what happened was he did stabilize the price at 9,000, but then the paper money collapsed because now he started issuing money against these shares and not against gold, and down the whole house of cards. And so I do wonder whether, because history does repeat itself, whether when we have the next big hiccup in the bond market or the stock market, the Fed's going to look at history and say, hey, look what Bernanke did. It worked. Let's do it again.
Right, exactly.
Only this time it won't be $7 trillion because the debt is twice as much as it was back then. It'll be $14 trillion or some number like that. And what happens when in one of those episodes, Goldman Sachs or someone, or PIMCO or someone calls their bluff and says, here are these really crappy toxic assets. Here you go, Fed. Give me the dollars, right? And that could happen.